3 at 3 brought to you every business day by marketrebellion.com. And starting up the presentation now. It is the 23rd of September, 2020. And I am that guy. As far as our disclaimer, this says that all investments involve risk. You should be aware of that always. And that this is presented for educational and informational purposes only. Full stop. Intellectual property rights are that we have patents, trademarks, copyrights, etc. on this information, folks. Before you use it in any format, please ask us and, of course, cite marketrebellion.com for it. Applied Materials. Just wanted to show you this one because, of course, we've got a rather aggressive sell-off today. The sell-off today kicked off by a combination of COVID information out of Europe, as well as Dr. Fauci here, and the idea that perhaps the Fed chairman is jawboning about Congress doing something, which, you know, with a no-do-nothing Congress that we've got, they know that they basically helped put 22 million Americans on the unemployment roster by these lockdowns because, you know, if you have no reason for your business to be open, people are not just furloughed, they're put on the unemployment lines. And now, since July 31st, Congress has magnanimously decided to let them twist in the wind, that for political reasons, they will not give those 22 million. Now, this is not me basically lobbying anything for me, folks. This is me lobbying for the 22 million Americans whose voices are mainly silent, and yet you see them. I see them here in Chicago. I'm sure you see them where you are. It's pathetic that Congress, and yes, I mean Nancy Pelosi and Mitch McConnell, I mean both sides, they need to get something done and get those folks some money. Again, our business is fine. We're at record levels for our business. We are giving generously to charities and so forth. In fact, next week I'll tell you about a scholarship that I funded just out of some of the recent gains. But I want to let you know that nobody here at the firm needs that money, but there's a lot of Americans that do, and I think Pelosi and Mitch McConnell have abdicated their responsibility here. Let's take a look at Applied Materials. Applied Materials, November 60s yesterday we talked about. As I said, you know that we've seen a fairly aggressive sell-off here today in our market. So as we see that fairly aggressive sell-off, how did our Nov 60s do? I wanted to show you. There's those Nov 60s. As you saw yesterday, bought for $339. There you see the Nov 60s. Still basically the same price. The stock traded up to $58.88 or something like that today. So traded up about $1 and then pulled back. So at one point you did have a 60-cent profit in those options. Remember, folks, you have to set your entries and exits. I did not sell mine out. I did not close the position. But I also own the 57.5s and I'm short the 60s. But what I want to point out to you is when you have a 50 or 60 cent profit, if you elect to take a profit there and to print that, basically sell those calls that you owned for $3.40 up at $3.70 and take a 30-cent profit, no shame in that. I'm not saying I did that. I did not. I'm just saying that in these volatile markets where we're up the same amount yesterday that we're down today, it's not such a bad idea to take some quick profits. My brother Pete spoke about that yesterday on the halftime report. If you want to learn more about spreads, you want to learn about trading cryptocurrencies, futures, stocks, options, please check out marketrebellion.com/get started. Marketrebellion.com/get started. We'll let you look at all the offerings we've got for remote learning, for coaches and mentors and all that kind of stuff. Marketrebellion.com/get started. All right, Uber. Look at this. Stock's $34. basically back to where it, has run into resistance several times in these mid 30s. November 28 puts. So the bits of information that I want to make you sure that you're aware of are, number one, November options. So these aren't October, which is a month out. These are November, 2 months out, approximately 60 days-ish into the future. 28 puts means that these are $6 out of the money, and they were trading for right around $1. Now, I am much more likely to follow this money, but to put on the 30 versus the 28, to put on the 31s versus the 28, that kind of stuff, because I like having spreads on where I'm not as subject to theta, which is time decay, or vega, which is volatility. I think you need to decide what's best for you, and I'll grant you that those are 2 trades versus just 1 trade of buying that put outright, but I'm letting you know how I like to view these opportunities. Now, they do have earnings after the close on the 2nd of November. You need to be aware of that. So, in other words, this does cover you through November earnings. Here's a graph. Stock is working for us already. It's trading at the lows of the day just moments ago, 33.80. So these puts are still out of the money considerably. But as you see, the stock is bleeding off here. And this would be one of those arrows in your quiver that you could have for a little downside, if you know what I mean. Let's take a look at GLD, which many of us also view as a stock that could help you to the downside. The biggest one is the one that I spoke with yesterday with Stevie Vicks on my podcast, and that is the VIX itself, because it moves inverse generally to the markets. So I'm always harping on that. But here's gold, a safe haven of sorts, and we saw a bullish 3-way. Somebody came in and bought 6,000 January 185 calls. So that's October, November, December, January, 4 months into the future. They bought those $10 out of the money calls. They sold January 160 puts against it. So, you've got a situation where somebody's owning the 185s. They sell the 205s. That's 20-point call spread. They collected $1.74 against $4.74 roughly. So let's call it $3. They paid $3 for that call spread, and then they sold puts for $2.11, the January 60 puts, which obligates the seller of those puts to be a buyer of stock at 160 or lower, at the owner of the put's discretion. It's no longer in your hands when you've sold the option. Option owners have rights, option sellers have obligations. So this person taking on that obligation, basically, in rough terms, instead of $3 on the table, has a little less than $1 when you figure that they paid $3 for that $20 spread and then collected $2 for the sale of that put. Now, as always, that is a risky trade to the downside because, again, you're forced to buy stock at a descending price. And that is an obligation that you have as the seller of that put. However, I am not doing that trade. I am instead buying the 180s, selling the 185s, and not selling the put. But we wanted to cite for you exactly what went on when somebody bought 6,000, which is 600,000 share equivalent of the 185 calls, sold those 205s, 600,000 share equivalent, and sold those puts, 600,000 share equivalent. So what I did, folks, was I jumped in here and I did the 180 calls in January versus the 185 calls in January. So as you saw, they traded 6,000 of those. As you can see, if you look to the far right, second from the last line there, you see volume for those 185 puts. Calls, rather. 185 calls. I apologize. Those 185 calls, 8,500. So they're up 2,500 contracts in the last hour since they noted this. And if you own the 180s, and you've sold the other, the 185s, that is a $5 call vertical or bull call spread, because you are bullish when you put on such a trade. You've addressed theta, time decay, as well as volatility, vega. But neither are terribly impactful in the short term for this trade. I'll show you, however, that all you have at risk here is $1.30 for something that could go to $5, because as you can see, in rough terms, you paid $6, you sold them at $4.70, that's $1.30. You get the idea. You know, you've got about $1.30 to $1.40 on the line. You don't have to worry about time decay for a very long time. You don't have to worry about volatility compression, and you could turn $1.30 or $1.40 into $5, the differential between 180 and 185. So that's one for you to watch as well. Last of our 3 at 3. Pins or Pinterest. Look at all these calls trading. Stock was roughly $40, and they're buying the 45 calls in October, the 43 calls in October. They're buying the 42 calls in December, and that's what we cited because that was the first one that we saw earlier, but I wanted to show you the constellation, or in other words, many of the most active strikes. December 35 calls, deep in the money call, $4 or $5 in the money, 7,000 of those, and you get it all the way down the line. So, Pinterest, we've had good luck when we've seen institutional buying in here. This is truly institutional buying, big blocks of calls being bought, and there is the stock as it breaks down to 39.40. So just this morning in the first hour of trading, hour and a half of trading, stock was basically 42.40 thereabouts. It's given up all of that and then another 80 cents or so. So I like picking it up down here. I like putting on a spread, 40 calls in Pinterest. You could pick October or December, and I like selling a higher strike above that against it. Like doing all of that on a day when Pinterest is down 3%. One more time, marketrebellion.com/get started. You can learn all about trading spreads and so forth. Also, I want to let you know one last time that at 4 p.m., in other words, just about 40 minutes from right now, I'll be going live with A.J. Monty. A.J. Monty used to be on a show on PBS called The Market Guys. He is a brilliant strategist, a CMT, and we're going to be talking about levels in the market. We're going to be talking about the sell-off that we've seen here today, strategies like crazy. It's all free, and you can sign up at marketrebellion.com. So if you're somebody who's wondering what's going on in the market here and you'd like to hear us discuss it, hear us throw out some strategies and so forth, please go to marketrebellion.com and sign up. It's the only way you can get in. marketrebellion.com. There is no fee. This is a completely free webinar. I encourage you to join us. Thank you, folks. I hope you have a great day. I hope the rest of it is good, and I look forward to seeing you quite soon. Thank you.